Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, March 4th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of quick clarifications. Number one, the candlestick that you see right there will be moving around and changing. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. Second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one, ticker symbol BTAI, big mover today. I talked about this as an area of resistance previously, and you can see opening 30 minutes of the day, came up, broke through that red line resistance, and then absolutely exploded to the upside. So yeah, very, very impressive day, and certainly needs to be updated now. I'll just get rid of those former areas there. And now we have a good solid pattern here that has formed, so let's get this pattern drawn into play. So we have the lower part of the pattern right there, area of support. And then we have the upper part of the pattern. Let's get that out of the way. There we go. Right here. And this isn't an exact trend line, but I'm just trying to illustrate the fact that there is a pullback underway. So if you draw this upper trend line a little differently, whoa. And this is why I like to do these when the market's open still. Look at that. What just happened now? And what was that? Okay, there we go. All of a sudden, a big drop. So, all right, well, we'll have to see what happens moving forward, but all of a sudden, that got very, very sketchy in a hurry, and it's been halted. So, like I said, you never know what kind of action you can catch. That's why I like to use when the market's still open for a little bit. So, a big drop to a halt. So, when you watch this video, the market still go out about 27 minutes before it closes. That's what you want to check on. Is this pattern still valid? If it's not, and the prices come down here, then the next level that you're going to want to immediately check is right here, these moving averages, which you can see right here are very important. And if the price were to drop down below there, so I'm not saying this will occur, but if the price were to come down here and then drop, that would be putting the price right back inside of where it all started. So that would be a very bad situation. Again, I'm not saying that'll be the case, but if when you're checking on this, you're saying, actually, yeah, Clay, the price now down below those levels, that would be very rough. On the flip side of things, let common sense guide you. If you're watching this and the price is all of a sudden back above this resistance line here, that's telling you a breakout is underway. But no doubt about it, things are very volatile right now, so we'll see how it goes. And like I said, by the time you're watching this, you'll have a way better idea of how things closed. Next one here, taking a look at BTOG, and this is no need to beat around the bush, a very ugly looking chart to think that it started off there and has now come all the way down here. But for you longer time viewers, you know what I'm going to say next. There can be opportunity in the ugly. And what I see as a potential interesting scenario here is the gap close and then maybe some sort of bounce. So right here at 19.5 cents. Now, there are no guarantees that it will bounce. And this also assumes that you're going to be a disciplined trader and all that. But if the price were to come down there, close the gap, nobody would be shocked to get if it does decide to bounce off of the gap close location. Again, not saying that'll occur. So that's why you got to be a disciplined trader with, managing risk and stop loss and all that. But I mean, to have it here all the way down, that's one of those things where it's so ugly that then people start saying this thing's never, ever going back up. And those are the moments where things tend to at least bounce a little bit. Not that I'm saying it's going to reverse all the way back around, but even a very moderate bounce compared to what was being risked in the first place, you could be looking at a very good risk versus reward scenario. So like I said, if you like these scenarios where you get something beat down severely and then all of a sudden it tends to bounce, or it's got at least a likelihood to bounce with a minimal risk compared to good upside potential, keep an eye on this one. Next one, ACON, very nice pattern here. So let's just get this drawn into play. So we have actually, let's just make that, there we go. Key area of resistance right there, and I'm going to call 825. Now, I realize it's not exact. Right there, the price went slightly above it. Right there, the price went slightly below it. But just trying to find kind of a middle ground. So 825 going to be the key area of resistance there. And then in terms of levels of support, you have a trend line right there that is in play. And then just to make the overall pattern easier to see, let's keep it one color. So we have our area of resistance. We have our area of support. We have the big move up right there. And then if you golfers out there try to make it a little bit more visual, put the golf hole down there, we have a bull pennant pattern. So while nothing is guaranteed, is it valid? Is it plausible to think that if the price were to come back up here and get the break, that break in of itself could create additional buying pressure? That is certainly a plausible scenario. So if you like bull pennants, you like this price range, definitely keep an eye on it. Next one, SMCI, and after an apparent maybe trying to level off on Friday and then a gap up this morning, the price has now drifted back to new lows. So I'm going to go ahead and extend this line out here, as that's the trend line that we've been following. And overall, you could also consider this now an area of resistance, but I'm just going to get rid of that because I don't have too much clutter everywhere. But that remains a key battleground, meaning I'm not saying that there can't be nice little upwards movements, but I just don't trust anything until the price can prove itself. And how is quote-unquote prove itself being defined? By getting above and staying above that level right there. So as far as next potential areas of support, what I'm going to do here is actually change to the 4-hour time frame, meaning each one of these candlesticks now represents 4 hours. But you can even see on the 4-hour, the price is now breaking down through that pink line there, 200 period moving average. Not a good sign. And then as far as where next potential areas of support reside, next level to keep a close eye on right down there around the $33.35 mark. So keep an eye on 33.35, as that is certainly an area that seems more than reasonable right now, given the immense amount of downwards pressure. But yeah, things are continuing to look rough here for SMCI. Next one here, NVDA, and again, things are looking strong going into the weekend. Well, they were looking like they had a potential to maybe make a bigger move up. You can see that was the last 30 minutes on Friday. Big green candle, nice volume, and then today there was a little bit of a gap down, but then the bleeding has just picked right back up and now sitting at new lows. So once again, and I've mentioned this before, and that's exactly why I continue to mention it, I'm not convinced of any sort of upwards movements until prices can break through certain levels. And in this situation, I think the most straightforward line to just watch is that purple line right there, 50 period moving average. Again, from here to here was very impressive, but I didn't believe it because the price and all that was occurring down below this moving average. So that's not to say that there can't be good moves, and it's not to say that this move couldn't have turned into something bigger. I'm just saying I am personally being skeptical of any sort of upwards movement until the price can get above and stay above the purple line there. So, keep an eye on that. Let's go to the 4-hour time frame, and then this is also showing us a very important level, which I think the price is still above it or no. Basically bouncing it right here. So check it out, 113. This was the lowest it got several weeks ago. And right now the price is once again, I'm sorry, not several weeks ago, but several days ago. And once again, the price right there. So is there some sort of double bottom that's coming? Is the floodgates about to open back up? Nobody knows the answer to that, and that's why risk management matters. But yeah, got to think a lot of people are watching this dynamic here and wondering what is going to happen. But 113, certainly a very important level. Real quick, want to take a break and personally invite you to get signed up for this free live online webinar that I'm offering later on in the week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down below in the description box you can use, or if you're watching right at my website, there's an area on the webpage that you can use to sign up. So like I said, if you've been enjoying, then definitely get signed up for the free class. Next one here is TSLA Tesla, and like a lot of these other ones, there are some signs of strong movement, and then even today there's a gap up, but things have rolled back over it. Now, to be fair to Tesla, it has not violated or gone through new lows like a lot of these other ones have. So there's still, the argument can be made that Tesla is holding up better than these other ones, but it is nearing that key level right down in there around 273.50. So if the price does come down there and then break down through it, that would, Tesla would just be joining the club of a lot of these other stocks that are now, after some strong upwards movement, breaking down below the low. So going back to, key areas to watch from a resistance standpoint, once again, 50 period moving average, I think, makes a lot of sense to watch. You can see right here, yeah, the price did get above it, but as soon as it broke back below it right there, you can see it went right back to acting as resistance. So it's not a question of, the price never being able to break above that level, but it is just a question of, I would be very hesitant of, claiming anything is bullish until the price can at least stay above or break above and stay above that purple line right there. So again, 50 period moving average going to be that main initial area of resistance to watch moving forward, with 273.50 being a very, very important level of support. Next one here, PLTR, same general idea of what I've been talking about. Yes, it started off strong, but now things are giving up. But also like Tesla, not nearly as bad as some of these other stocks because at least it hasn't revisited these lows. And I would say that this area here at $80.80, a very important level and a level you want to see hold, because if the price were to come down there and then break down below it, what would that be doing to the price? That would quite literally be putting the price right back to where it was. And I mean, not to insult your intelligence, but price movements that make really nice moves and all of a sudden go right back to where they started, not exactly a sign of genuine power or strength or anything like that. So definitely if the price continues to come down, you certainly want $80.80 to hold, because just for the very reason you don't want the price to be going back to where this very nice move actually started. If the price does try to curl back upwards, a couple of ways you could look at it. Again, and I realize I sound like a broken record, but a lot of these stocks that are very popular sort of are looking the exact same right now. But you could continue to use the purple line there, 50 period moving average, as a main area, or you could just get yourself a nice trend line in play right there. And you can see that that level has, been doing a good job of forecasting recently areas of resistance. So I'll leave that kind of up to you. But anyway, look at it. Nice bounce. Now things are rolling back over, but how bad does it get? The next couple of days are going to be very revealing. Next one, TRNR, tricky chart to talk about because it's all about perspective. I mean, if you're some sort of day trader, flipper, scalper, whatever you want to call yourself, and you bought up there and your plan was to buy and sell within, 3 minutes, well, then from that perspective, yeah, things are looking absolutely terrible because there has been this big pullback. Now, if you're looking at things from the bigger picture standpoint, then from there, the price does still have the opportunity to build a higher base. I mean, if you look at the lows, you had lows there, lows there, lows there, lows there, and lows there. And if you envision each of those as stair steps, to be fair, yeah, stair steps are still progressing in the upward direction. Again, 100% understand that if you're a day trader and you bought right there, you don't care about these stair steps. That's why I'm trying to distinguish between more of a day trader and somebody that cares about the bigger picture point of view. So from the overarching standpoint, even with the big pullback today, the price does still technically have the opportunity to build a higher base, and that's why I think that purple line is important. And for the opposite reason, right? In a lot of these stocks, the price has been trapped down below that purple line. In this situation, the price is above it, and you, from a bullish standpoint, ideally want to see the price stay above it, because as long as the price stays above that purple line, then that does imply the price is putting in higher bases, and that is definitely the key dynamic. In terms of areas of resistance in the near term, I'd say to keep a close eye on that level right there around $2.65. But yeah, no doubt about it. Today started off very nicely, and then this big old pullback, but let's see if it can ultimately result in a higher base. Next one here, FTFT, and I should have totally put this one in a different spot, but think back to the one earlier where I talked about it being very ugly, but there can be opportunity ugly, and then I talked about gap closes and how things could potentially bounce. So think back to that because it's basically going to be a broken record mirror image of exactly that idea. So no doubt about it, very, very ugly looking chart, but look, it's getting uglier and it's approaching that gap close. So while there are no guarantees, is it plausible to think that the price could close the gap and then get some sort of bounce? That is certainly a plausible scenario. So keep a close eye on 20.5 cents right there. That's going to be the key dynamic. Again, no guarantees. That's why if it crashes down, you want to make sure that you have risk management in play. But right now, with the price coming down here, it's one of those things where I don't think anybody would be shocked if you did, do get some sort of bounce. So if you like these scenarios where you're trying to play opportunity ugly, you're a disciplined trader, and you like these sorts of risk versus reward circumstances, then definitely keep an eye on it. Next one, INTC, and like a lot of these other ones, it was looking very promising, but this one is rougher than the other ones because the lows. So think about the idea is, well, some of these haven't gone down and retested lows. This one has, and it actually violated it. But to be fair, as of now, the price has bounced back upwards, and I say as of now, so market's still got about 11 minutes before it closes. So the price is doing its best to stay up here above that 22.65, which I would say is quite the important area of support. You can see that, that's the lowest it's been in, several weeks. So you don't want the price necessarily dropping down below there. But it is also one of those situations where, if you're thinking it could bounce, I can see that. Not guaranteed to happen, but I can see your framework of mind and why you would think that. But that is also why, the risk management, as I've said, matters, because you have some people thinking, I think it's going to collapse to the downside. So you have shorts getting ready. You also have people saying, no, I think this thing's going to bounce back upward. So you have longs getting ready. Somebody's going to be right, somebody's going to be wrong. But the common denominator here is that 22.65 is going to be an important area to keep a close eye on. I'm going to just go ahead and bring this level down because that level way up there is really no longer relevant. But if the price does try to bounce back upwards, key level to watch initially going to be right up there around 20. Oh, that makes it easy. 23.65, key area of resistance. 22.65, key area of support. So we'll see what happens with it. But yeah, things are certainly looking a bit weak right now. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about the tool, then definitely get signed up. Thursday, March 6th at 8 p.m. Eastern Time. So hope to see you there. And then as far as these videos are concerned, if you enjoy, as always, please hit that like button. And if you're looking for a super free and easy way to support the channel, please hit the subscribe button. It's amazing how much that actually does help. So hit the subscribe button, as it truly does make a difference. So thanks for watching. Take care. Have a good one.